Hey everybody, Chuck Barone here, Friday, August the 19th, 2022. Happy weekend. My beloved Buffalo Bills playing in a preseason game tomorrow against the Broncos. I know it's only preseason and I shouldn't be so happy, but sorry guys, I'm a huge NFL fan and I'm pretty excited to have the season coming up here pretty quick. Anyway, I babble. As always, before we start the show, I just want to thank everybody for their support for the channel and the videos. You guys are the best, most loyal. We really appreciate your support and all the action you guys give us every day, liking the videos and your comments and questions. It means the world to us, guys. It really does. In the markets today was one of those odd, freaky, weird days where the market didn't like anything. Basically, everything was down today, which is really odd. I guess people are converting to cash. The stock market tanked pretty hard, down across the board broadly. The Dow got killed, but so did the S&P, so this was widespread across the markets. I think the market's coming to grips with the fact that these, they kind of were calling the Fed's bluff here as far as are they going to have the stones to continue raising rates even if it kind of squashes the economy. And it looks like, they're starting to believe the Fed's serious about it, tanking stocks today, tanking the bond market today. The 10-year yield sitting at 2.99. Any second now it's going to go over 3%. It's still inverted, but the gap between the 2-year and the 10-year is narrowing. The yield curve starting to flatten out. All of this not great signs for this recession coming, and how the depth of it, how severe is it going to be? Stock market not reacting well at all to these rates going up, obviously, and to the seriousness now it appears the Fed has in doing what they have to do to get inflation down. So it's going to be, next week's going to be a very interesting week for stocks. We'll see if the Fed, parades their goofball show, the parade of yo-yos, I call it, where if they now try to, this week they wanted to make the market understand they were serious about raising rates. Probably next week they're going to be coming out and making the market kind of trying to come back from that a little bit to not scare the bejesus out of this market and see if they can't get stocks kind of more rally mode than getting crushed like they were today. The dollar today just continuing to strengthen. Again, I guess the market's buying into the Fed story now. They're going to continue to raise rates. The dollar absolutely crushing over a 108 on the dollar index. There's no competition for it right now. My gold and silver friends, hunker down or start looking for opportunity, because it looks like with the dollar this high, it's going to put a ton of pressure on metals, man. There's no doubt about it. Today, metals tanking, silver down to $19.16 per ounce, gold at $17.48. They both recently broke support numbers. I think they're both going to start heading back down to bounce to test lows again. With a dollar like this, it's just going to be tough going for metals fans. So either look at this like it's a chance to, either hunker down with your position or to add to it, because it looks like you're going to have a chance to dollar average down, especially if you were buying above $20. Oil down today like everything else. $90.02 per barrel for West Texas Intermediate. Natural gas bounces just a little bit up small, $9.27 per their 1,000 BTU. Natural gas has been hot, oil has not. Even though $90 per barrel in my mind is still a pretty high price for a barrel of oil, the market seems to think that it's going to go down from here. I think I'm getting a lot of bearish sentiment on oil right now. China, their economy, whether they want to admit it or not, or will admit it or not, their economy is contracting now. Demand for oil is coming down. People are starting to conserve. Even the viewers of this show, when I asked you guys to, in the comments, talk about your driving habits, have you changed your driving habits with the gas price higher? The vast majority of people that responded to that question are changing their driving habits. Doing small things like all their errands in one day instead of going out every day, and just doing little things to conserve gas, rather than just behaving like it was when it was $2 a gallon. Bitcoin today, another sad day for Bitcoin, getting clobbered today, down over $2,000. It's sitting just around 21,200. It looks to me like Bitcoin's going to kind of free fall down to those lows around 18,500. I don't know, maybe we get a bounce here, but it looks to me, I haven't really taken a good look at the chart, and I know charts with Bitcoin are a little odd, but it looks like if you're a technical investor, it wants to go down and test these lows. I'm kind of surprised, honestly. It looked like Bitcoin was building some support above 22,000. To see it come crashing down like this was a surprise to me, and we'll see, if this trend down continues. If it does, again, I'm thinking it's probably going to want to go down and test those lows around 18,500. In economic news today, not a lot really happening out there. We'll get some earnings coming up after the market today. But one thing that came out was the Philly Manufacturing Index, the Philly Fed Manufacturing Index. And manufacturing, according to what the Philly Fed's saying, is accelerating. So when you add that on to the jobs report, and all the other economic data came out this week was pretty positive for the economy, shockingly. All of that data coming in contributed now to the week closing on a down note. The market's taking losses for the second week in a row. They had kind of a weird V-shaped thing going where they were down pretty dramatically, and then they were kind of bouncing back up. The S&P actually came out of bear market territory. Now it looks like that rally is going to kind of fizzle a little bit here with the reality of what's going to be happening with rates settling in. It's going to be this is, I got to say, a very interesting market. I wanted to say amusing. That's probably not the right word, though, but a very interesting market to be watching every day like this, because it just seems like it's just whipsawing around. One day everything looks horrible. The next day the market's rallying and all this good economic data is coming out. It's kind of in 2008, the last big one, we knew what was coming. Everybody saw it. And we knew we were in a recession. There was no up and downs like this. It was just downs. So this is kind of a fun one to watch. Fun, for lack of a better word. Very interesting stuff going on. A lot of interesting stuff in real estate today. I was reading an article that's saying that Blackstone now has their $50 billion real estate fund put together. They're not only going to be buying real estate here in the United States, but in Europe, Great Britain, Japan. They're looking to take over the real estate market. They're going to be pressing hard on, individual buyers. Tough to compete with institutions that have that kind of firepower, man. $50 billion. But the article went on to say that they were a little careless the first time around with the way they spent money, because there really was no ceiling. They were the ones leading this phenomenon of paying over appraised value. They didn't want competition in their bidding and in their contract offers, so they were willing to pay more than anybody to get those contracts. Well, now things are kind of turning around here. I was reading that going into August closings, 63,000 real estate purchase contracts canceled this month, or over the last 30 days. That's 16% of all homes are under contract in July. That seems like a pretty big number of cancellations of houses under contract, because it's typically not real easy to walk away from a real estate contract. When you make an offer on real estate, typically you have to put down a deposit with that. They call it your earnest money deposit to show you're a serious buyer. Typically between $3,000, $5,000, or even more, depending on what the down payment's going to be, but typically between $3,000 and $5,000. And when a buyer decides to walk away from a deal, a contract he's already signed and committed to, in a lot of those cases, they're walking away from that earnest money deposit. So walking away from a contract in a real estate deal is not always a freebie. And to see that kind of percentage is 16% of the contracts in July canceling. That's a lot of people, 63,000 people possibly walking away from thousands of dollars of saved money that they were using for earnest money deposits. That was a big surprise. Now, they did take a survey, a real estate survey through Fannie Freddie, and this survey said that the sentiment on real estate right now is turning very negative. In this poll, 67% of the people polled said that right now is not a good time to buy real estate, versus 17% who said now is a good time to buy real estate. I think that if I'm being polled, I'm in that 67% because rates and prices don't match right now. But it's going to be interesting to see where real estate goes. The correction is really starting to pick up steam now. I was reading another interesting article on Bloomberg this morning. It says that mortgage lenders now are finally, we expected this to come. We've been talking about it since the show started, that mortgage lenders are going to start vanishing and disappearing. That's starting to really happen, especially the small non-bank mortgage companies. Their history, but two of the bigger ones, Sprout Mortgage and First Guarantee, now both have declared bankruptcy. They're both going the way of the dodo bird. It's going to be the beginning of a new thing. So if you have money in this market, if you have money invested in the stock market and mortgage companies, take a good look at those investments, because that money right now is under risk. Even the leader in mortgages in this United States, the Wells Fargo Bank, they've already declared that they're going to dramatically shrink their mortgage department. And they're not talking about just for the short term during this correction. They're talking about for now and forevermore. I think that they probably are looking at some losses in their portfolios that are going to be pretty staggering going forward, enough to scare the crap out of them, where they really want to now get out of the real estate market, or at least shrink their exposure to it. Now, this one's a little different than the big one in 2008. That was basically a total systemic failure, from Wall Street to the banks to the government to the lenders to the consumer, a cascading chain of disaster. This time around, it's just a little bit different. The banks are fine and want to lend money. The borrowers just don't want to borrow money at those rates. And of course, the banks, being the greedy, nice people that they are, they're charging more for everything. But is your interest rate at your savings at your bank going up? My assistant Jake, my production king here, he told me his actually went up 1%. He's now getting 1.5%, yay, on his savings account. I guess that's better than the zeros they've been paying, but not anything certainly to write home about. I think before this inflation is over and the Fed's finished raising rates, you're going to get a lot more than that in your savings accounts. And I think what will happen is some clever company will come around. I remember last time around when rates were like this, Dreyfus came out with a Lions fund that was paying honest, real return rates, and literally it crashed their whole thing. So much money came swarming at them, they actually had to close a money market fund. I think that some clever company is going to come out with a money market fund like that, and that's going to start to drive the whole interest market upflow. You'll actually be able to have your money liquid in an account at a money market, or in your savings account, and actually earn a few shekels on it, rather than basically getting no return on your savings at all. Anyway, guys, it was a quiet day today. Not a lot of real news to talk about, just the way the drama in the market was, with basically the market hating everything today, having a little tantrum where everything is down. Next week's going to be a very interesting week. We have a lot of data to talk about. We're getting closer to the end of the month, and some really important stuff coming out that's going to set the direction for not only the markets but our economy and the way things are going to look for us all going forward. Have a great weekend. Enjoy your time. Try to focus on fun stuff and your families and your friends. Get away from this market and all the craziness of the news cycles, and try to enjoy breathing and living and getting some sun on your face, guys. Anyway, interesting week this week. More to come next week. A great weekend for us all. Go Bills. We'll see you again on Monday. Thanks.